What's up, crypto legends? The price of Bitcoin getting a huge major drop. I'm going to explain in today's episode why we're holding the $57,000 range. If we do not consolidate in the next coming hours at this level, we are likely going to go to the next big level of support that will be explained in today's episode. Of course, we'll be talking about the major levels of resistance as well, what levels we need to claim to even start to think to become bullish. We're going to take a look at some very interesting news as well that is going on. We do have the interest rate decision today, which is likely not going to be any cuts at all. And we take a look at the DXY. The DXY is looking very bullish. We just broke here from this weekly descending channel resistance today, and we're likely going to go to much higher levels. And we know that if there's a strong dollar, then of course it's a weak Bitcoin and stock market. Now, guys, for anybody that is interested in trading, make sure to check out Bluffing. They are going to be no KYC for a long time, and you do have an exclusive bonus of over $80,000 with my link in the description. Let's dive in here right away into the content, guys, because we did get a huge major collapse during the last few hours, over $3,000 of a drop. And I want to explain, why is this level holding? Why are we actually getting a reaction at this $57,000 range? Well, we did speak about this on yesterday's live stream. It would be the first level of support to get a reaction. So far, the price is consolidating here during the last hour. It is getting a reaction. We are pumping a few $100s. I'm going to talk about a possible trading setup that could happen. And if we do lose the lows, then obviously I'm looking at the next level of support. Main reason why we are holding this range, just getting a small little reaction, it's because it's this massive high volume node from 2021 and 2022. And we are just about to hit the 50% Fibonacci from this pivot low, okay, to the pivot high from all-time high, basically. We almost hit that level. That level is hitting $56,200. We haven't quite hit that level. And I'm going to explain here on the lower time frames how we could hit that level, hit today's lows, and possibly get a bounce. The bulls are probably going to try and maintain this level of support for a very nice bounce. So we're going to explain what we need to see on the chart, because this level might be lost. And of course, you don't want to be getting into any long positions on a falling knife, only if you do get a reaction. Of course, we'll be talking about the short trading setups as well. Of course, we are on a very strong downtrend, and there is a lot of resistance, okay? Supports that have been broken will be turning into big major resistance. So let's go on the lower time frames. This level here where we are consolidating at the moment during the last hour is also because we had a naked point of control. This is the last week of February. We've got a high volume node right there, and the price is getting a reaction. It's also a daily low that we had here from the 28th of February. When we go to the daily chart and zoom in, we can see here how that daily level is acting as support. So we basically just tested that daily level that we had from the 28th of February. And if we do zoom in, we're just testing here that level and getting a reaction. If this level is lost, I would be looking here for this daily high of the 26th of February. That is a very strong level as well. If we do manage to just test that level, we might consolidate and get a bounce. But first of all, we need to break through the 50% Fibonacci retracement from this pivot low to the all-time high. Now, I'm just going to leave the Fibonacci here from this pivot low to this pivot high, because no doubt, look at this. We've been seeing reactions at the 236, sorry. We got a major bounce, okay, from all-time high. 236 did get a big bounce. Next Fibonacci level, 382. Big reaction right over here. We got a couple of wicks, but it was maintaining as support. Big major rally. The next Fibonacci level is the 50%, which is around about 56,200, 250 approximately. We haven't quite hit that level just yet. If we do hit that level, can we get a reaction just like we did with the previous fib levels? We're going to zoom in on the lower time frames and analyze that situation. What I would be looking at here on the 15-minute chart to see if we are going to get a major bounce. Well, of course, I would want to see that double bottom. Okay, I want to see that double bottom. I want to see that level of today, that low, being claimed again. And if we do claim that low, then no doubt if we do recover from that low, we could be seeing a much larger relief rally. Now, no doubt that we've had a major downtrend during the last few days, and it's very difficult to speculate on a long position. I know those swing traders out there that are in long positions and looking to add to their position, they are obviously getting absolutely wrecked right now. We do not look to add to a position and hope for a bounce on Bitcoin. We react according to the technical analysis, right? So if we do get this low taken here in the next coming hours, no doubt that we could see a reaction at the 50% Fibonacci. We've seen the rest of the Fib levels, 236, 382, getting a huge major bounce during the last few weeks. 50% hasn't been hit yet. We almost slightly had a front run here just today. We've been getting a bounce of a few $100s. If this low is claimed, it is very close to that higher time frame 50% Fibonacci. So no doubt a movement to the downside here. This is the moment where we can speculate on a potential bounce. Why? Because the price has got a major waterfall and now is going sideways. Now is the moment where we can speculate in a long position when the price action is getting exhausted, okay? When the price action is slightly going sideways, now we can think of a potential day trade long position. If you are trying to catch a falling knife here, you're just going to get absolutely burnt. So this is what we are waiting for here. This is my possible plan. If we do come to the lows here, we got the 50% Fibonacci from the higher time frames, right? Where we're looking for that possible reaction, just like we did during the last few weeks, where we had the 382, okay, getting a big bounce right there. This is this greeny horizontal line, the 236, okay, the red horizontal line, big major bounces from those Fib levels. 50% has a chance, okay, which is sitting around about 56,250, and it could turn out in a swing failure pattern from today's lows. We are getting the price just slightly going sideways today. So that is the most important level of support. We're basically at that level right now. A reclaim of that low of today is going to be very interesting. If this low is going to be lost, then obviously we are looking for this candlestick right over here is the one where it could act as support slightly, and we're going to be analyzing very, very carefully here if we are going to start consolidating and then speculate for a long position. Now let's talk about the levels of resistance. No doubt we're going to zoom in here on the lower time frames, and the monthly low from March and also from April are the levels that we need to take into consideration. This is going to likely be very strong resistance. However, if the price does blast through the previous month lows, we can see here March right over there, and we can see April also. And when we zoom in on the lower time frames, such as the 1 hourly time frame, we can see how we got that bounce yesterday exactly from that level. That is the March low. And of course, with the closing of April, we have the low right over here as well. If we were to see a reclaim of that level, it's only a pump of $2,000. It's going to be very difficult. No doubt we're going to see a lot of resistance. We could be seeing some shorting opportunities. I'll zoom in here on the lower time frames so you can analyze that potential lower high to come back down. No doubt that shorts are in our advantage with this movement to the downside, but we could be aware of a short squeeze. There's a lot of selling pressure coming in here. There's a lot of liquidity sitting above us right now. When we do take a look at the liquidity heat map, we can see that there is lots of liquidity building up above $60,000. So we just need to be aware. You don't want to be the last guy shorting the market, but there could be some short scalp trading setups, no doubt, because we are in a downtrend and we want to follow the downtrend. But overall, looking at the potential bullish case scenario, we need to reclaim the March and April lows, which is sitting at the $59,000 range. If we suddenly get a bounce and we're starting to reclaim this level with a huge amount of volume, really nice price action, this will actually look pretty bullish. We could start claiming some lower highs here at the $61,000 lower high from yesterday. Also, this lower high right over here from Tuesday. This is today's lower high, actually, because we'd have this major drop. This lower high right there, this lower high over here, and that could be definitely kind of a short squeeze. We could be getting a huge major pump only if we reclaim the 2 monthly lows from March and April, which is, they are both at $59,000. So a big recovery above that level. No doubt we can start thinking of the market getting a recovery. For the moment, market is looking bearish. It looks like that we could go to lower levels. So far, we are holding this level by a thread. So we got that possible long setup here, hitting the 50% Fibonacci. Let's zoom in on the lower time frames, such as the 3-minute time frame, because no doubt we want to take a look at some shorting trade setups. If we do come all the way up to this lower high right there from this major collapse that we had today, this lower high is going to be a crucial pivot. That is no doubt a level that I would consider looking for a short position. Why? I'm going to explain right away. It's the first dead cat bounce high that we have from the major drop of today. And that is a classic level for the bulls to reclaim, and then the bears have massive power. If it does end up in a swing failure pattern, claim that level and get a major pullback of several $100s, or even coming all the way back down to the lows of today. That is definitely a possibility. This is a very, very good technical level. The first dead cat bounce high from this major drop. Very, very technical. That is sitting at $58,600. And if we do zoom out slightly here on the 5-minute time frame, and we analyze the pivot high from today's drop, basically, okay, where we would take a look at Fibonacci to the pivot low, we can see that that 618 Fibonacci is just above the first dead cat bounce high of today. So this zone is going to be a great zone to reclaim, hitting the 618. If we do get that wick above that level, hitting 618, there's no doubt that if you fail to break above this lower high right there on the 5-minute time frame, we're likely going to get a pretty decent pullback. So I'll be analyzing that level here to see if we do get a rejection. That is a great trading plan right there to get a pullback of several $100s, or even coming back down to test the lows of today. That is basically it here for the technical analysis. We're going to take a look at the DXY. DXY is looking bullish. However, we are testing the highs here from April, and no doubt that this could turn into a double top. That would be a bullish thing for Bitcoin to get an instant recovery here in the next coming hours and days. No doubt that we could get a pretty decent pullback on the DXY because we're just testing the highs. We do have an interest rate decision. Likely there's not going to be any cuts at all, so maybe this is priced in already. We're probably just going to get a bit of volatility locally. I wouldn't expect a huge massive pump or a drop either on DXY, just a volatility in the local range basically. And if we do break the highs of April, then no doubt that the October highs from 2023 are going to be tested, and of course this will be bad for the stock market. It will be bad for Bitcoin as well. I am looking for the October highs of 2023 to be tested, and this would be the last hope basically for Bitcoin and the stock market. If we do break through that level, then obviously it is kind of game over for the next coming months. A bullish dollar index obviously will be devastating for Bitcoin and crypto and the stock market in general. However, we need to give it a chance. Could it be that we are going to double top from the October highs of 2023, and then we're getting a huge, massive recovery? We need to know that this year is an election year in November. Usually election years for the last decade have been quite bullish for the market. So let's see what happens. However, we do have a possible interest rate cut coming in the next coming months. Possibly it's going to be in November, maybe October. We do have the press conference today from the Federal Reserve. Maybe it's going to give the exact dates, the exact month where we are going to get those rate cuts. And when we do take a look at the previous cycle back in 2019, when we did have the rate cuts, we did have a major collapse just before the rate cuts. So is something similar going to happen? Rate cuts is not bullish in the short term. This means that the economy is not doing well and the money printer should go on, but it's going to take a bit of time for that money printer to go on. So usually you have a major crash just slightly before the rate cuts and during the rate cuts potentially. And once the money printer goes on, obviously we can be looking for that recovery. So another interesting fact, of course, we're going to take a look at the bullish things. We have the Hong Kong ETF just bringing 121 million on the first trading day. Yes, this was more than the US inflows during the last 6 trading days, but like expected, the Hong Kong ETF was really not going to be much on the short term. We've actually got a big major collapse because of the live trading going on since yesterday. It was very much expected that this was not going to move the market, okay? Like a lot of people were saying, okay, this is the next thing. This is the next hype, just like we did see with the US ETFs. And absolutely not, guys. This is not too much volume is going to come here on the Hong Kong ETF. So overall, wouldn't pay much attention on the short term for this because this is bullish for the mid-long term. Taking a look at here at the previous cycles, of course, we got a little bit of hope, a little bit of bullishness. No doubt that the next coming months don't look that great when we take a look at the economy, the rate cuts. However, a little bit of hopium here for you. We have seen major corrective moves on the previous halvings, okay? Just post the previous halvings, we have been correcting significantly on the previous cycle. So we can see the halving here back in 2016. We did get a major drop just after the halving. Also back in 2020, we did correct quite a bit. And right now we are seeing the correction here from the halving just happening a few weeks ago. So is this natural? Like I said, on the higher time frames, it's not looking too great. We need to start consolidating to even think that we are going to be bullish and get a recovery. We need to reclaim some certain levels, such as the monthly lows from March and April. That will be looking pretty bullish. If we do reclaim those monthly lows, it looks like that the recovery can be pretty nice, at least days after hitting that monthly level and recovering from that zone. On the other side, if we start losing the $57,000 range, no doubt the next level would be the 56,700, which is a daily high that we had on the 26th of February. Potentially that high is going to maintain a little bit and we are going to consolidate. And if we start getting into a big, massive waterfall, the strongest level is the 618. No doubt that the price is going to get a reaction at this level. It's the $52,000 range where we also have a huge, massive volume node. This level, no doubt, is going to get a reaction, whether that is a few $100s to the upside or a couple of $1,000s to the upside. But if we start breaking down here, guys, we do have a big gap in volume on the volume profile, and we could see that major collapse till we get a reaction here at the 618 Fibonacci and this high volume node from the consolidation of February. Guys, thank you very much for joining today's video update. Make sure to subscribe to the channel. Check out my Bybit tutorial if you want to learn how to trade on that platform. Thank you, and I will see you in the next one.